Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm live on the floor with George Milling-Stanley. He's Chief Gold Strategist at SSGA. George, thank you for joining.
Thanks for inviting me.
So it's 2024. What's gold been doing this year?
We're doing pretty well. It's up about 17% year to date, setting fresh all-time highs on a number of occasions, and it's firmly established itself over the $2,000 an ounce level, which had proven difficult for the last few years. So it's done very well.
Are there particular drivers? What's sort of pushing the performance this year?
I think a lot of different things. The jewelry demand is very strong, especially in the emerging markets. Chinese economy seems to be recovering. India's going very well. And as they go, then so go the rest of the emerging markets. But also central bank demand is very strong, buying of gold for official reserves. Those are think of the two main drivers.
So a lot of times we end up in conversations about gold, right? Everyone sort of has their opinion, but a lot of conversation ends up in a couple places. You've got interest rates and how gold may or may not be impacted by interest rates, also inflation. When we start to think about those two topics, how do you blend it together and how should people think about gold?
I think the important thing to realize is that the really important relationship for gold is not with interest rates directly, it's with the dollar. Now obviously interest rates can have an impact on the dollar, as they did in the fall of 2022 when the Fed raised rates by 75 basis points 3 times in a row. That drove the dollar to a 20-year high against almost every other currency, and that was something of a headwind for gold. So that's the relationship to watch. The other one, you talk about inflation. Gold's not a good predictor of inflation, and it's not good as a protection against sudden sharp moves in the rate of inflation. But if we have sustained high inflation, sustained at least 24 months, and high meaning above 5%, then gold tends to do very well. We haven't had that in this particular bait of inflation that we've been going through.
So for those that aren't aware, GLD is actually coming up on its 20-year anniversary this year, which is phenomenal. So let's take it back to ETF portfolio level. When someone thinks about portfolio management, portfolio allocation, how do they think about gold?
I think historically the promise of gold for investors has had a dual nature, and I like that over time, not every year, but over time, gold can help to enhance the returns of a properly balanced portfolio. And whether the gold price is going up, down, or sideways, gold is also reducing the risk in a portfolio. If it's enhancing your risk-adjusted returns, that's something I want in my portfolio done.
So something that I know you get called upon, and it's not a perfect science, but when you start to look into the future, whether it be the remainder of 2024, we start to look into next year, how do we start to think about where gold's headed?
I think we look at the historical environment that we're in. Macroeconomically, it's the kind of environment that has always been favorable for gold in the past. And if we look at geopolitics, then the world's a pretty scary place. And that, again, has also usually been favorable for gold. So I think we're going to see higher prices as the year unfolds.
Okay, so stay tuned as we go forward and start to celebrate even more the 20th anniversary of GLD. Now, as a reminder, if you caught this episode live, you're looking for additional thought leadership content, you want to learn more about gold, you can do it all at our website, etfcentral.com, brought to you by none other than the New York Stock Exchange, the home of ETFs.